LCID investors from the outset have had quite a roller coaster. An initial surge in share price to $60 a share following the merger announcement swiftly turned into a negative trend as a result of firms like Faraday Future with unrealistic valuations and weak business strategies popped up. There was a sense of panic among the Californian startups investors since Lucid had not yet released a product. In fact, the stock reached an all-time low and was trading below the $20 threshold. What happened next? That's right, Lucid Air followed. Finally, the corporation was able to put automobiles into production and put them on the roads. The stock price had returned to its previous levels. Happy days. But then came the subpoena, and the negative trend started to surface, slowly and surely as the time passed. For the time being, the stock has remained more or less constant. But what does the future hold? What do the analysts think about LCID? Stick around to know the answers to these questions. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder, subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved, and we feature them in our upcoming videos. By 2026, according to research conducted by Mordor Intelligence, the electric vehicle industry may be worth a whopping $1 trillion. In comparison to today's worth of $260 billion, this would indicate a compound annual growth rate of more than 23%. Projections suggest that unit sales will increase from around 2.5 million in 2020 to approximately 11 million in 2025. At that rate, electric cars would account for around 32% of total new car sales. Government rules and policies continue to be significant drivers of the electric vehicle industry. At the moment, Asia is the market with the quickest growth. However, substantial EV incentives are available in the United States, several EU nations, and Australia. Lucid Motors is making every effort to enjoy the benefits of this ideally timed future growth for the company. While the current semiconductor supply issue has had an effect on the electric vehicle industry, growing demand and strong execution appear to be playing in Lucid's favor so far. After a spectacular jump in the company's stock last November, investors have slowed their buying of the company's stock. To be sure, LCID stock isn't the only electric car investment that has seen a pause in recent months. Many of its publicly listed competitors, both early stage and mature, have had the same problem as a company. Lucid, one of the most exciting EV companies, may have a tough time gaining traction in the short term as the marketplace takes a break on tech stock of all types. The electric-powered luxury sedan, which won Motor Trend's Car of the Year title for 2022, is poised to make a home run in the long run. Although it may be performing brilliantly and proving its critics and naysayers wrong, it must be conceded that the market got a little ahead of itself by bidding it up into 2021. It's possible that the stock will remain stable at or around its present share price for the short foreseeable future, but consider it as an EV waiting to recharge for another 500 miles. When the next major piece of good news comes out, the odds are good that it will send the stock soaring once again. The growth of Lucid's stock may be stalling. However, the firm as a whole continues to go forward. Not shortly after the start of the new year, the manufacturer stated that it will begin delivering vehicles to customers in Europe later in the calendar year. Similarly worded headlines could be expected numerous times this year as the firm advances from the first obstacle of producing first deliveries to the second difficulty of ramping up production. Passing this second obstacle will determine the eventual performance of LCID in 2022. It will be up to time to determine whether it succeeds. Perhaps this explains why the sell-side sector is mainly divided on the issue. According to the Wall Street Journal, about half of the analysts who cover the company have assigned it a hold recommendation. The majority of experts on Wall Street are bullish on LCID. For instance, according to a survey conducted by Seeking Alpha, of 5 analysts that follow the company, the average price objective for the stock is $42 per share. That is an increase of 8.5% above the current share price. Meanwhile, 2 of these experts believe the stock is a strong buy, and one believes the stock has a great priority of $60 per share. Furthermore, according to a TipRanks analysis of 6 experts, the average price goal is $41.20, representing a 6.4% increase over the current price. Lucid has also been the subject of a study conducted by Yahoo Finance, which utilizes Refinitiv analyst data. The average price prediction is $42.75, which is a 10.4% increase over the current price. Next, Lucid stockholders should be delighted with the fact that the LCID stock price was up on January 19th. Due to the lockup expiration of the largest shareholder, investors were anticipating a very turbulent day for the shares of LCID, and rightly so. During the day, the stock fluctuated in the low $39 region in the pre-market before rebounding to the $41 level, a gain of more than 5%. The fact that the daily volume on January 19 was moving close to its daily average indicated to the market that PIF were not selling out in massive numbers at all. This means that legacy shareholders have decided not to sell and instead want to keep the shares for the foreseeable future, as we predicted on our channel prior to the date of the official statement. Because of this, there is a strong likelihood that Lucid will continue its winning run. Despite the fact that the stock has lost some of its luster in recent months, the actual firm is still on a roll. It has achieved a number of significant milestones in recent months. The number of reservations is increasing all the time. Because 17,000 consumers have placed reservations for the Prestige Air sedan, the company is likely to meet its 2022 manufacturing target of 20,000 cars without having any difficulty finding customers. The firm has established an impeccable signature as a maker of high-end luxury electric vehicles. It is setting itself to become a key player in the future by offering a distinct product range to customers. The business has had $4.8 billion in cash on hand to invest in expanding its manufacturing capacity. However, despite Lucid's outstanding pre-order record and promising future prospects, the company is only just a fraction of Tesla's market valuation. Because of this, LCID stock is an intriguing EV investment at this time. The business, without a doubt, will be watched as it prepares to begin mass manufacturing of its cars in the near future. It's expected to be a breakthrough year for the company's long-term prosperity, as well as its capacity to recruit long-term shareholders. However, all signs point to Lucid's success as it seeks to re-establish itself as a dominant force in the premium electric vehicle market. A successful execution of business strategy will be critical for the firm, else things may become hard for its stock price. LCID stock, on the other hand, seems to be quite appealing at this moment after tanking the lockup expiry. And it is for this reason that it is still regarded as a good deal in 2022. Jose Aponte predicts that if they continue to accomplish their targets, the company would trade between $300 and $400 in a few years, and above $1,000 if they get many strong catalysts. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.